Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, March 20th, 2024. Fed came out, didn't do anything as everybody expected. They weren't. Um, I'm not really quite sure what was said that it really sparked the markets. Maybe that, they're in consensus that they're going to do a rate cut, but the thing that is kind of you got to chuckle about is this entire rally started right here. I mean, we had obviously a nice rally up here, but this is when he was talking about a rate cut now, and the street was pricing in 6 rate cuts, and they've been saying no, and now they're saying they're looking at the possibility of doing a rate cut this year as long as the data calls for it. And they're just adding to this this rally off of something that was failed miserably here as far as what the Fed and what the expectations were. So it was a day that in the morning notes I said it's a pretty good day to not really do anything, just watch it, because you don't know what's going to trigger the algos one way or the other. I said that in the credit spread class as well. I said you do not want to make a trade. I did try a tester in my this spec account that is not real money on it, where I was doing it was a combo trade, and it's been working really well over the past few days. But I really wanted to put it through the tester with extreme volatility, and the trade overall finished. It was a break even trade almost. I think it was down like 300 overall, but the test failed miserably. It was a combination of the S&P and the spiders, and it just didn't play out as I wanted to. I thought the spiders were going to keep up with the S&P as far as on the option end of it, and that didn't happen. And it ended up being like the one that you got stopped out was a loss of 2,000. That was on the call side, but we still had that was just that particular end of it. And the spiders never came up. That they at the end of the day, they ended up coming up and washing out that. But the fact that if let's say that when we had that little blip here, when we had to move up and then came down, if it would have stayed down, that trade would have been a disaster. So it was a test. It was not real money on it. I wanted to just put this particular, uh, say, theory to the test of extreme volatility, and it failed. Even like I said, even though it was almost a break even trade, it could have went real bad, and that's not really what I was looking for. So it's they work when, like, for the yesterday, today, or yesterday and the day before, when we were moving up, we had some volatility. The S&P was up 29 points, but it wasn't the spike up that we saw like this, where you go up 30 points. That's where things go, fall apart. But in any case, let's get back to where things are. So I said that the Bulls broke through this triangle here. If it's going to play out to a T, the upside target is going to be the 50 to 60. And if we come up and just kind of put this, and you look where 5160 is, that's this trend line right here. So this is actually, looking pretty good as an upside target. It's 40 points away. I don't think we're going to have another 20 or 30 point day tomorrow. But, I'm done trying to figure out when the Bulls are going to run out of steam on this. So maybe they do. But in any case, this is the upside target, and this is also this trend line. So as we get closer to here, maybe it gets closer to Woody's, when he was looking for the top to come in, and everybody gets trapped up there. Volatility got absolutely hammered today. The VIX got crushed. The put call ratio is back down at extreme lows. So as I thought was going to happen, meaning once this market does turn, whether it is right here or takes a little longer, um, people are going to be trapped with no safety net, and it's what it's going to do is it's going to exaggerate the move down. But I'm not saying it's happening now. I'm saying when it does, there's going to be no protection with the VIX. That everybody's going to be stuffed in calls, and that's when you see a really, really big move to the downside. But we haven't seen that yet, and I'm not guessing when. We do have an idea when to look for it, and this is, maybe a short-term top. We have to keep an eye on it, but there's no bearish divergences, right? Well, I mean, if you go from here, yes, but the thing is that this it broke through it, so I'm not really counting this as a bearish divergence. If we look on the 60s, we still have them, but these things have been going since February, so uh, I would keep an eye on on the 5260. I think that may be a decent area there. And the Bears, they have their work cut out for them. First thing they need to do is get it through the 5190. Then they need to get it through the 5170, and then even have 5154 here. So these are, three pretty decent little support lines right here. And then when you could even just keep going and saying we have it at 5130. So they have a lot of support levels here. So the Bears are going to need to really, if they're going to try to put anything together in the near future, they have a lot of work to do as far as getting things through these support levels. So right now, the Bulls are in control. Well, at some point we are probably going to get it tested at 5190. Is it, do we go up here first or down? I think down and up. We could go up some and then down and up. But I think we're going to get a little bit of a break. But keep an eye on this 5260. I think it's going to be an important little thing where we're going to get one of these moves down, and it may pop back up again. But we know when to start looking for the topping period. Right now, there's nothing that's really screaming a top is coming right now. But we just want to keep an eye on things. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in a